By atomic time, it's 7:51 on the 3rd of November. I have been at this desk for 13 hours. I'm not discouraged. I have this robustness to remain hopeful and focused. But I fear that I'm watching too many markets and I'm losing my focus. However, when markets go crazy and are all over the place and with big moves, it's really hard to think. So today at 6:15 in England, the U.S. released their FOMC minutes, and they said they're going to spend $600 billion and print a bunch of money and buy a bunch of bonds to prop up the U.S. economy, which is basically good for equities, bad for the U.S. dollar, bad for the 30-year bond because they didn't say they're going to buy the bond, etc., etc. And my trading plan works, but I sometimes don't see it, which is frustrating. It's kind of like having a bunch of winning lottery tickets, or just say dollar bills, flying around you in a little tornado, and you can't catch any of them. Frustrating. For example, I'll show you. This is gold. These are 1 minute candles, so each green or red bar is 1 minute. We have a low right here, but this green candlestick next to the red candlestick, I know it's blurry, sorry, is a bearish engulfing pattern. It's a reversal pattern. Also, on the bottom Bollinger Band, which is here, it measures volatility. That's the reversal pattern. We have RSI oversold, but there's no divergence. Usually, as prices make lower lows, RSI should make lower lows. But if there's a bullish engulfing pattern, meaning there's going to be a reversal, RSI will climb as price comes down, which is divergent. One's going down, one's going up. Stochastics break out of oversold, and you can see it's up 13 points. Well, I missed that. Well, that's the 1 minute candlesticks. This is 5 minute candlesticks. I just showed you that. That's the right there. This is the trend line, and it also came down to the trend line twice today. And I missed this bearish engulfing pattern, so you can see we have bearish engulfing now. So we have prices making higher highs, RSI making lower lows. So while prices were going up, RSI should have been going up. So because RSI was going down, that was a sell signal right there. You can see there's my signals, some of them. Double top, 1, 2 wicks outside the Bollinger Band. Break of stochastics from the overbought territory. And it was down like 30 points today. And it would have been nice nailing that trade, but I didn't. And then I was watching it up until here thinking I was getting short, but then I went to have lunch, and then I missed it going off the cliff. I could have been selling the break of support right here, but I was taking lunch there, and 30 minutes is down 25 points. But you can see this is the long-term trend line. It held it here, it got back above it. Here's 6:15. It touches the trend line, gets back above it. And if I zoom out, I'll show you that trend line. This is how amazing financial markets are. So this is the last 12 hours, like a half a day. If we go to daily candlesticks and I'll show you gold, this is the 28th of July. Each one of these green or red candles is a day. And we're basically looking at half of this red candlestick. You can see where it tags the trend line as it did 2 days here, a day there, 3 days there, and 4 days there in end of July. The S&P, well, I got long here. I could have exited, but I got stopped out here at off 1%. This was the news, this is the volatility. You can see as prices are coming down, we have a downtrend, but in RSI we have the uptrend on the 1 minute candlestick, so that's bullish divergence. We have a bullish engulfing pattern here, and we have it on a trend line, which is 1, 2, 3, 4, 5 contacts. And you think, reversal? Well, let's scroll ahead and then zoom out. Oh, where'd it go? It gets really boring. Well, it's really boring. You can see the reversal. We have the downtrend. We have the bullish engulfing pattern. RSI is making higher highs. Breakout of stochastics in the oversold territory. Bullish engulfing pattern outside the Bollinger Band. My 5 signals. But you can see in gold we didn't have any bullish divergence in RSI. However, I still had 4 of the 5 signals which was on a trend line, Bullish engulfing pattern on the candlesticks outside the Bollinger Band, and breakup stochastics. That's 4 out of 5, but we didn't have the outside divergence. It's my strategy. That's how I trade. I trade really technically, but sometimes you just got to see the momentum in the market and just go with it. I just got to let go of my fear and just trade with the trend. And you can see how ordered the S&P got afterwards. A real nice rally on 1 minute candlesticks. And like, I hope to have the courage to not be taking profit. I'd rather be adding to the position 2 or 3 times. Like, if you bought it there, I'd buy it there at the cross of the blue line, the 20-day moving average, and then I'd buy it there, the cross of the 100-day moving average, and then maybe get out of it when stochastics break out of embedded. You can see as it rallies up, stochastics stay embedded in the overbought territory, so you don't only get out when stochastics drop down to the 50% level. Oh, technical analysis, I'm good at it, but I'm trading shit because of sometimes focus. I'm splitting my attention between too many screens, and I still don't have good confidence to open trades, even though I'm only trading 1% positions. It's just frustrating. Like, I've studied this for 3 months on a master's course. I've studied and printed off 1,500 charts. I've watched the market for maybe 4,000 hours in the last 3 years. I understand what's happening. I just gotta do it, and it's so hard to do it. One day it won't be hard. One day. So that summarizes my day on the 3rd of November. But tomorrow I will trade better. So, gold shit the bed. The S&P shit the bed, but almost made new gains. And the euro dollar. God, the euro dollar swung like 200 points in 15 minutes. I think all the guys in Hotcom, all the pros that I work with, a lot of them got their ass kicked. Well, I only lost 1%, so no overtrades at least. So I still have until Friday, because on Friday is the non-farms payroll. So if the market gets ordered, I'm going to wait and join the trend, like on the 3rd contact to a trend line. So no more trading economic releases.